Imagine this. You're sorting your mail like any other day, and you see a certified letter with a government return address. You open it expecting routine paperwork, but it says you didn't report a foreign bank account. The letter mentions large penalties, possible account restrictions, and follow-up questions that could spill into other parts of your life, including immigration paperwork if you're a green card holder or applying for citizenship. That scenario can feel terrifying, especially if the account is something you barely think about. Maybe it's in your home country, maybe it was opened years ago, maybe it only holds a small amount. Now let me be clear. This video is not here to scare you. It's here to give you calm, practical clarity about foreign account reporting. Because the biggest risk for most people isn't doing something shady, it's not knowing the rules or assuming a small account doesn't matter. You may have also seen viral claims online about a brand new 2026 banking rule that supposedly lowers reporting thresholds for seniors or immigrants and automatically links IRS, FinCEN, and immigration agencies in real time. Those posts are spreading fast, and they're causing real anxiety. Here's what we can verify from official sources. The core foreign account reporting rule most people are talking about is the FBR, and the basic filing threshold remains the same, generally tied to whether your foreign accounts total more than $10,000 at any point during the year. So rather than repeating scary internet claims, let's focus on what's real, what's common, what can trigger penalties, and what you can do to protect yourself, especially if you're a senior, a green card holder, a naturalized citizen, or someone with family ties overseas. Hi, I'm Sofia. I help people make sense of complicated U.S. financial rules in plain language, especially people who are retired, supporting family abroad, or navigating immigration paperwork while trying to do everything correctly. Most people I talk to aren't trying to hide money. They just didn't know they had a reporting obligation, or they assumed it only applied to wealthy people. That's why this topic matters. Foreign account reporting rules can apply to very normal situations, like keeping a savings account back home, having signing authority on a parent's account, or holding a foreign retirement plan. Let's start with the rule that causes the most confusion, the FBAR. If you are a U.S. person for FBAR purposes, you may need to file an FBAR FinCEN Form 114 if the combined value of your foreign financial accounts exceeds $10,000 at any time during the calendar year. This is not based on interest earned. It's based on the highest total value during the year, even if it was only for one day. And yes, U.S. person can include U.S. citizens, green card holders, and many people who meet certain residency rules for tax purposes. The second big misunderstanding is what counts as a foreign financial account. People often think it only means a standard checking or savings account. In reality, foreign financial accounts can include other account types too, depending on how they function and where they are held. The safest approach is to assume that if it's held with a non-U.S. financial institution and you have ownership or certain control over it, it may be reportable, and you should confirm with a qualified tax professional. Now let's talk about the part that trips people up: small accounts and inactive accounts. A low balance account can still be reportable if your total foreign accounts cross the threshold. An account you rarely touch can still count. A joint account can still count if you have access or authority over it, and if you have signature authority over an account, even if the money isn't yours, special rules can apply in some situations. So the real danger isn't a secret new rule aimed at seniors. The real danger is assuming it's small, so it doesn't matter, when the legal system may still require disclosure. Now, what about the claim that 2026 brings full real-time sharing between the IRS, FinCEN, and USCIS? Here's the careful truth. Agencies already share information in various ways, and foreign account compliance has been enforced for years. Foreign banks can also report certain U.S.-linked accounts under international reporting frameworks. Articles and professional guidance widely emphasize that unreported accounts can be discovered and that enforcement has increased over time. But I did not find credible official documentation supporting the specific viral claim that a brand new 2026 rule lowers FBAR thresholds to $5,000 or $3,000 based on age or being foreign born. the official IRS FBR guidance still centers on the $10,000 threshold. So, if you've been scared by posts stating that seniors and immigrants now have a lower threshold, treat that as unverified and potentially misleading, unless and until you see it on official government guidance or reputable professional analysis that cites the actual rule text. Now let's address the immigration angle, because this part is real in a practical sense. If you are a green card holder or applying for naturalization, tax compliance matters. USCIS can review your tax history during the citizenship process, and financial issues can create delays, extra requests for documents, and more questions, especially if something appears inconsistent or unresolved. Even when a mistake wasn't intentional, it can still complicate your timeline and add stress. That doesn't mean one mistake equals denial. It means your best strategy is to stay compliant, fix issues proactively, and document what you did to correct them. So, what should you actually do? Start with calm organization, not panic. Make a simple list of every foreign financial connection you might have. Include accounts you opened years ago, accounts you rarely use, and accounts where you have access even if the money mostly belongs to someone else. If you have foreign retirement arrangements, insurance with cash value, or other financial products overseas, list those too. Then look back and ask, in any year, did the combined value of these foreign accounts go above $10,000 at any point? If yes, or if you're not sure, that's where a tax professional can help you evaluate whether an FBAR was required and whether other forms might apply. If you realize you should have filed FBARs in the past but didn't, the most important advice is this: don't ignore it and don't guess. There are compliance options that may reduce penalties for people whose mistakes were non-willful, and many reputable tax professionals handle these situations regularly. Professional resources also emphasize that penalties can be severe, but that proper correction strategies exist depending on facts and intent. Also, be scam aware. Whenever foreign reporting topics trend, fake filing services pop up and target seniors and immigrants. If someone messages you saying they can erase penalties or get your money back instantly, that's a red flag. Stick to IRS and FinCEN official pages and work with credentialed professionals. Here are quick answers to the most common questions people ask. Your regular U.S. bank accounts and U.S. Social Security benefits are not foreign accounts, so the foreign account reporting discussion is about accounts held outside the U.S. A foreign account that's basically empty can still matter depending on your total combined foreign balances and whether you cross the reporting threshold at any point. Joint accounts can matter if you have access or authority. The details depend on the exact setup and your role. Penalties can be significant, which is why early, accurate compliance is so important. Now let's zoom out because I don't want you leaving this video feeling stressed. If you have foreign accounts, the goal isn't fear, it's clarity and control. Once you know what you have, understand whether the FBR threshold applies, and file correctly, you can usually move forward with a lot more peace of mind. And if you're planning to apply for citizenship, getting your tax and reporting history clean and well documented ahead of time can prevent avoidable delays later. If this video helped you understand something you hadn't heard explained clearly before, consider sharing it with a parent, grandparent, or a friend who keeps an account overseas. Most people don't learn this from the government. They learn it when there's already a problem, and we're trying to prevent that. One last important note. This is general educational information, not personalized tax or legal advice. Every situation is different. If you're unsure, the safest next step is to speak with a qualified tax professional, like a CPA or enrolled agent, who has experience with international reporting, and if immigration is involved, consider coordinating with an immigration attorney as well. Stay informed, stay organized, and don't rely on viral posts for rules that can affect your finances and your future. HTTPS, www.irs.gov, businesses, small businesses, self-employed, report of foreign bank and financial accounts, FBAR, UTM source, OxChatGPT.com, report of foreign bank and financial accounts, FBAR, HTTPS, www.fincen.gov, system, files, 2025-12 FBAR filing requirement for certain financial professionals, PDF, UTM source, use ChatGPT. FBAR filing requirement for certain financial professionals. https www.taxes4expats.com. Articles DEFBAR, FATCA, they detailed look at the foreign bank account report, MEFBR, form, chain ML, UTM, source, chat GPT. FBAR filing requirements and deadlines in 2026, taxes for expats, https www.taxes4expats.com. Articles FBAR, FATCA, FBAR penalties, HTML, UTM source, chat GPT, FBAR penalties in 2026, guide to late filing fees and relief,